Okay, so what kind of situation do we currently have on Euro JPY? Now, if you remember from our previous analysis, what did we say? We said the market is clearly creating an M formation and we want to see the market make a move back to the upside to the neckline of the formation, aka the previous support now turned resistance at this area. And in fact, that is where the market has now gone. Now, it would have been better to see the market go first lower and then complete the pattern because it would have been a better risk to reward to the neckline. But anyway, the market has now completed the M formation. So it's time to update our view on the pair. Let's go and see what we have from a weekly perspective. Now, on the weekly time frame, it's pretty clear that we have a nice impulse, a nice correction, and after an impulse and a correction, you expect the market at least to try to make the continuation to the upside. If we go up on the monthly, there is a very interesting thing that we can see. On the monthly time frame, we can see that in 7 days, this monthly candle will close. Now, if this monthly candle will close with this shape, you expect the next candles to fill in the wick of this candle. Why do you expect this? This is a pattern that repeats over and over and over again. For example, look here. The market created the candle with a long wick, and in fact, the next candles filled in the wick. And now what you can see here is that if this candle will actually close like this, we have good probabilities for the continuation to the upside for the next weeks. So at the moment, monthly, weekly, and daily are in a bullish structure. However, the daily time frame has still not confirmed that it can be in a bullish structure. Why? Because look at this. We have clearly the previous support now turn resistance, which was the completion zone of the pattern. However, the last daily candle closed below the area. So this is still resistance. For this to be turned support, we need to see a clear break above the area. If we will see a clear break above, then this will be turned support, because now this candle can still close below the area and respect it as resistance. Now, before I show you what we will be looking at on Euro JPY with students, let's go and see what we have from a COT perspective on the Euro and what we have from a COT perspective on the JPY. Now, the Euro, we have already checked it before. In our previous analysis, we can see a clear shift from minus 85K net positions all the way up to minus 117K, actually from minus 114K all the way up to plus 117. So hedge funds went from having way more shorts than longs to having way more longs than shorts from an institutional perspective on the Euro, with 19K shorts closed with the last report, another 2.4K longs added, bringing longs at 187K and shorts at 69K. And if we're going to see what we have from a JPY perspective, what we can see is that JPY is getting quite strong. Okay, we're currently sitting at minus 22K net positions and a lot of shorts are getting closed. Now, it's true that they haven't been adding longs yet, but with the last report, a lot of shorts have got closed. So it's a little bit risky to be looking at the longs on Euro JPY because obviously you would be shorting also the JPY. But that is why trading is reactive and not predictive. And we already know that we anyway need to wait more because this area here is still resistance until it will be broken to the upside. So what we have to wait for, if the market has already done something like this, okay, low, high, lower, low, and now the market is here. If the market will manage to create an equal high, then we expect a move to the downside and then continuation to the upside for the creation of the inverted head and shoulders. So the way in which we will be approaching this with students is very simple. We will be waiting for a last move to the upside, creation of an equal high, and then a retracement back inside of this area. And then inside of here, we will be monitoring price action with students on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And if the market inside of this area will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside. And if the monthly time frame will actually confirm this candle for the filling in of the wick. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.